Bitcoin, not crypto. That's the lesson.
Bitcoin has now created history, and Michael Saylor, the executive chairman and co-founder of MicroStrategy, has naked evidence about it. Earlier being known as something worthless by businessmen and entrepreneurs, Bitcoin has become the only asset everyone trusts. But how? Well, the crypto and the stock market have manifested that. Some of the most influential investors are now recommending Bitcoin after the FTX fall. But what's the whole story? This video is going to change what you earlier think about cryptocurrencies because Michael Saylor has something to tell you. Watch the video until the end to prevent the mistake that cost thousands of investors their millions over millions of dollars. Hello and welcome back to the Metaverse Economy, the channel where you get all important updates about the crypto world. If you want to stay on the surface during these uncertain times, you will find all videos here that really matter. Let's get started. What's happening in the crypto market now has never happened before. Yes, crypto prices fluctuated earlier, but returned to their normal levels. Even some cryptocurrencies fell to the lowest levels but still rebounded. The crypto market wasn't as horrifying as it is now. Earlier, investors would invest in even meme coins, lose money but make massive profits in return. But now stakes have gone up because a new dark era of crypto has been ushered in. Only a little mistake can rip you off all your savings, no matter how carefully you invested earlier. But why has that happened? Well, we never see crypto exchanges and crypto asset storing platforms going bankrupt, collapsing, and filing for bankruptcy. We never saw the 100 billion crypto platforms being grounded overnight. But how and why did this happen? Why have cryptocurrencies been so scary that it's better to stay away from them? Well, yes, a big trust deficit has caused that. Nobody can estimate the intensity of the loss the crypto market is facing. It can be deemed the biggest loss in any assets market history. Listen to what Michael Saylor has to say about that.
The entire Bitcoin movement got started because of a loss of faith in the currency and a loss of faith in banks. And so this has gone on since time immemorial. Banking crisis that froze customers' funds and currency crisis that collapsed their purchasing power. And Bitcoin was created as a currency that couldn't be debased, running on an open network so you could be your own bank. And the principle is if you're your own bank and no one has discretion to debase the currency, then you're not going to wake up one morning and find out that your funds have been seized and they've been devalued to zero.
Here's a little reminder to like the video if you were loving it. And if you don't want to miss videos about proven investment and the crypto market, subscribe to our channel. Let's continue now. The major reason why cryptocurrencies were developed was to replace fiat currency. Michael Saylor said people didn't want their assets to get seized when they woke up in the morning. They had seen financial crises and even collapses where their money was completely seized. They have kept off their money since banks needed it to survive. Even if the money belonged to the account holders, the banks and their owners were deciding its fate. That was a dire exploitation of someone else's money, which the money holders hated. They wanted a system, a network, that could replace banks and their monopoly. People have to rely on banks for transactions, so they have to use them even if they hate them. They want a system that would be answerable to the customers, not the CEOs and owners. However, as long as they have paper currency, they will need banks. It was inevitable. That's where cryptocurrencies came in. They came as saviors who would allow people to get redemption from fiat currency. Hundreds of thousands of cryptocurrencies were launched after Bitcoin, and people were trusting them blindly. They'd have got something that they used to fantasize about. How could they doubt it? But sadly and devastatingly, not all cryptocurrencies follow this principle. Listen to what Michael Saylor said about it.
Crypto and the entire movement is almost like the reinvention of fiat currency and fractional reserve banking, but instead of it being in a regulated environment, it's just in an unregulated environment. So ironically, we saw the same human behaviors here. A human being creates a wildcat bank, unregulated. Then a human being creates their own currency, like the FTT token. Then they issue a bunch of it. Then they start to leverage it and borrow against it. And then at some point, they start to misuse the funds of their customers in their bank. And they use it to prop up their currency. Eventually, the currency collapses. The bank freezes its assets. People who had trusted the bank lose their assets. People who had trusted the currency lose their purchasing power.
Almost 99% of cryptocurrencies were launched by project owners who had absolute authority to make all decisions. The only difference was that those projects were unregulated by the governments. Neither were they decentralized, nor they gave power to the users, nor did they make users independent of the CEO's monopolies and self-interests. Those projects launched their tokens and coins, which the investors rushed to the same way as they held paper currency. Those projects did exactly the same as the banks perhaps. They were more brutal than the banks. Banks can promise to pay you back if if anything happens, but no return is possible after seeing what the crypto exchanges like FTX are going through. What the crypto projects really did was first to win investors' trust. Those investors were afraid. They didn't want to trust. However, they were coaxed to trust. They invested their hard-earned and saved money. Those crypto projects made them believe their money is safe like never before because cryptocurrencies use complex cryptographic algorithms to verify transactions. However, something else was kept hidden. The crypto projects themselves will do as much as possible to exploit the investors' money. Those crypto projects, on their CEOs' and owners' advice, used investors' money for shady businesses. Investors were under illusions that their money was safe. However, as the bank owners do, that money was being used to make more money, but only for the project's owner. It's most unfortunate that the very saviors abused investors' money in the worst way they could. FTX and other declining crypto exchanges and projects were doing the same. And when this was made public, investors came to know how badly they were being exploited. They came to know why they were being given abnormal attractions and profits to keep their money invested in coins and tokens. Nobody expected that, but the crypto projects broke trust again. However, one cryptocurrency didn't join these shady businesses. It kept its principles the same as they were in the inception, to provide power to investors and make them independent in transactions. That cryptocurrency is Bitcoin. Listen to what Michael Saylor said about that.
And so this is a teachable moment because the solution is don't put your value in currencies that are controlled by human beings. You can't trust the CEO, you can't trust a company, and you can't trust a custodian. And if there's a counterparty, it's credit, it's not money. And Bitcoin is nobody's liability. There is no counterparty. Anyone that joins the network is their own banker. The reason it's money is because no human being or no organization has discretion over it. So, and if anything, all of the Bitcoin memes have come back to life. Not your keys, not your coins. It's constant. And don't trust, verify. And it's sad to say that this is an incredibly expensive lesson in basic fundamentals of monetary theory and banking and a principled way forward with your investment.
He asked not to trust any asset or project that finds its root in a human being who will make decisions on the project's behalf. Investors would think it's their decision, but no, the owner's decision will prevail and be portrayed as the investor's decision. However, in the case of Bitcoin, no custodian will exploit investors' money. Nobody knows who Satoshi Nakamoto is because no human being controls Bitcoin. It's an asset with a value which runs on its own and grows due to its investors. That's why Michael Saylor said that Bitcoin, not the crypto, is the lesson. Bitcoin has no counterpart and it's no one's liability. It still today has those same raw goals and principles for which it was created. After losing millions over millions of dollars in investing in unverified assets and coins, investors have learned the most expensive lesson, as Michael Saylor said. However, if you were saved from these shady cryptocurrencies, you would have a lesson free of cost. Use it wisely. If you want to invest in cryptocurrencies, only Bitcoin is the answer. Forget about all other cryptocurrencies, said Michael Saylor. Do you agree with Michael Saylor, or do you think other cryptocurrencies will rebound and investors will still invest in them? Well, if they did invest, they would lose their money again, and this time, it will be worse than ever. Comment right below in the comments section. Will you personally invest in Bitcoin or any other cryptocurrencies? Do you want to watch more videos like this one? If yes, then please like and share the video and subscribe to the Metaverse Economy for more videos about the crypto market and investment insights. Until the next video, stay tuned.